Hi everybody, this is AJ with Succeed in Finance. Welcome to the channel. Today we are going to talk about moving averages. What are moving averages, how to use them, how to determine buy and sell signals on the financial markets using this powerful indicator. And I'm going to share my thoughts, my preferences about this indicator, how I use it. If you're new to the channel, please consider subscribing, hit the like button and also press the notification bell to not miss our future videos. Okay, let's start from here. I'm going to use a couple of examples, pretty simple examples, in order to represent you what actually is a moving average. So I'm going to use this one. It's a pretty simple 5-period moving average, simple moving average. I'm going to shift it 2 period in front. Take a look here. You can adjust it by yourself. I actually recommend you to do so, to play some to play a little bit with these adjustments in order to see different moving averages and what do they represent. So as of now, we've got 5-period moving average, simple, and shifted 2 period in time. So what it represents a moving average? Imagine that we are in this period of time. We take the last 5 close prices and we calculate the average price of these 5 closing prices. Let's start from here. We've got 1, 2, 3, 4, 5. Between these 5 prices, what is the average? The average is going to be somewhere around here, right? So here is the point of the moving average. On the next period of time, what we've got, in order, just let me put it in this way in order to be more clearly seen. If we take these 5 bars, 1, 2, 3, 4, 5 bars, where is the average of these prices? It is right here. The previous period it was here, etc. You know. So accept the moving averages. It is what it is. It just calculate the average price of the last n bars. N bars depends on the period of time that you have chosen. And more important is, let's make some conclusions and to see how it looks like. So first of all, when we have period like this, when we have an up movement, what we have, the prices are above the moving average. The moving average itself, it moves up. And also when we have a down movement, the prices are below the moving average and the moving average itself starts to move also down. It sounds pretty much like we are using a classical trend lines, right? We know what do I mean? If we draw a trend line on the price chart, what we have to do, we have to put a line on the low prices on the price chart. And if we have a downtrend, what we have to do, we have to put a draw line here. We have to put a line that is on the highest prices on the price chart. And we are doing these conclusions. When the price is moving above the trend line, we have an uptrend. When we have a breakout, the prices go below the trend line, we have a potential sell signal. And when the prices continue to move below this trend line, we are considering that the trend is down. So it is pretty similar with the moving average. First conclusion of using moving average, they are like moving trend lines. It sounds pretty obvious, but it is not so easy when you are real time on the financial markets. Imagine that we are in this situation. Pay attention to the end of the chart. If we are in this moment, what we are looking right here, the prices went above the moving average. So what is the conclusion? We have already here, we've got a potential buy signal, and we have to keep an eye on this moment. If the prices continue to stay above the moving average, so we've got an uptrend. Let's see bar after bar. Keep in mind that here it is a Tesla stock price chart, 4 hours, 4 hour period. So each bar represents 4 hours of time. You know, over this period, in this case, what we've got here, 4 hours, 8 hours, then what, 12 hours. The prices keep staying above this moving average. Over this period of time, we are saying to ourselves, we've got an uptrend. So let's continue. What we've got here, the uptrend goes on, hop. Here what we've got, here is the potential sell signal. The uptrend is over. So in other words, this instrument, this powerful tool, moving average, helps you to determine at any moment what is going on right now at the stock market that you are trading at any given moment. So let's play a little bit with the adjustments. As I said, I'm using here simple moving average 5 period, shifting 2 bars in front. Why is that shifting? So what it represents, this shift, instead of this moving average to be here, it is shifted a little bit in the future, but it helps you. It's a very pretty simple and common technique used by all traders and investors, but it helps you to determine, it is visually much more clear what is going on. So if let's take a look what is going to happen if I remove this shift. Hope you see how it looks like, right? The moving average is directly into the prices, into the bar charts, and it is not so clear what's going on, especially here in this moment. If we put here it is, if we shift it just two periods of time in front of the current price chart, we have much more clear vision what is going on. So it's a pretty simple technique. Some words about the types of moving averages. On default, moving average is a simple moving average, but there are some exponential smooth moving average. They are using a little bit more complicated formulas to calculate this line, this moving average. But briefly, what is the difference? The difference is that they're giving more weight to the latest price movement. So if we've got a simple moving average, as it is in our case, even the latest, the older price in this 5 period has the same weight, is with equal weight as it is the latest bar in calculating this moving average. But when we've got a exponential, it gives preferences to the latest price movement. In this case, in this way, what we are doing, we are trying to be a bit more flexible. This is the general conclusion for exponential moving average. It is a bit more flexible. It reacts pretty much faster than the simple moving average. So regarding moving averages, before you start using them, I highly recommend you have to do some homework. What do I mean? You have to test many moving averages in order to determine which one is proper to use in your trading strategy, in your analysis. Usually moving averages, the standard moving averages, they most of the investors and traders, they are using periods that are from the Fibonacci row, from the Fibonacci consequence. For example, this is a 5, 13, 21, 55, 89, etc. My favorite moving average, as I've said in my previous videos, is simple moving average 89 period. I'm going to remove this shift, but even if in this shift it's okay. So when you are training with using moving averages, what we have to pay attention to. First of all, let's get back to the main formulas. What we have to look after. If the prices make a breakout above the moving average, we are considering that from this moment on, we're gonna consider that that we have uptrend. From this moment on, let's take a look for how long period of time we have an uptrend. From this moment until the end of the chart, we are still in an uptrend. The second observation that we have to do is the moving average should play the role as a moving support on or resistance level. Here we see twice this moving average is playing this role. Moving average is playing the role of support in this case. What do I mean? The prices go down until they reach this moving average and bounce back from there. Here again, the prices go down until they reach the moving average and bounce back from there. Let's take a look at a little bit in the old price chart. Here the prices are going down until they reach the moving average and bounce back from there. Here what we've got, we have a breakout through the moving average, and since then they start to go down. Okay, let's take a look at some different chart. Here we've got euro dollar. Here again, what we've got before this moment, moving average is playing the role as a moving resistance level until the moment when we have a clear breakout, and since then the prices start moving up, and also the moving average itself is start moving up. Okay guys, something more we can use. I'm going also to show this moment the so-called golden cross. What does it mean, golden cross? We can use not only one simple moving average, we can use 2, 3 or more, whatever we want. I'm going to use let's say one additional moving average. The first one was 5 period. Let's the second actually the leading moving average, let's be in 55. I'm going to put it in a different color to be seen. No, I don't like it. Let's be 21. Okay. Okay, what does it mean, golden cross? So pay attention to this moment. If we are observing only the prices itself, we are seeing that they are constantly moving up and down, which leads to a bit hesitation. What's going on at the end? Are they moving up or are they moving down? And we can miss a substantial signal for buying or selling. As I said, pay attention to this moment. Here, what is happening? The shorter period moving average, 5 period moving average, is crossing the longer period moving average from up to down, which is a sell signal. It is up to us when or how we are going to react to this signal. Are we going to start selling, or we are going to close previously taken long position? It is up to us, and also according to our trading plan. But here is the moment. This crossing between these two moving averages is called a golden cross. What is happening, what we are achieving in this way? We are eliminating the so-called market noise. What is the market noise? As I said, this is constantly moving up and down of the prices. They are moving up and down, and we are wondering what's going on. When we are focusing on this moment, I'm going to let's put it in this way. I'm going to accept that the trend is already turning from up to down only if the 5 period moving average is crossing the 21 period moving average. Here I'm going to accept as a valid signal. Let's see here, when we have such a golden cross right here. And also once again, please consider the moving averages. It is what it is. It is just a mathematically calculated indicator. And also keep in mind that they are lagging indicator. They represent what has already happened. It is not an indicator that is going to show you something in the future. But on the same time, they are very powerful tool. All traders, all investors, they are using this powerful tool in order to determine their trading strategy, and they are using it in their analysis. Okay guys, there are many things that can be said about the moving average. Probably in the future video I'm going to share some other things about the moving averages. Let me just at the end also to show you. Here is Great Britain pound versus United States dollar. Let's take a look here, and let's I deliberately have chosen this short period of time. This is just a 1 minute chart. When the session is when the trading session is active, we can see that even on these price charts, 1 minute price chart, these tools can be used. We see, take a look at this period of time. These are 18 bars. What does it mean? It is 18 minutes. 18 minutes. Over this 18 minutes period of time, we experience a downtrend. So over this period of time, during the prices are constantly below the moving average. Constantly below the moving average. Let me shift it. In this way, it is a bit more clear, right? Okay, over this period of time, we have prices that are below the moving average, and we can use this to be a bit more confident that we are on the right position. If we have taken here short position, and what is happening right now? Ask yourself. Here we've got already what? Breakout. The prices went above the moving average, and they are still keeping they are still above this moving average. So at this moment we know that something different has happened. What is probably the trend is already, the downtrend is already over, and we may experience from now on an uptrend. It is up to us. As I said, this is a pretty short period of time, but it is you see that how much better is visualizing these moments when we are following when we follow the trend movements. Okay guys, I hope you find this video interesting. Please once again subscribe to the channel, hit the like button, press the notification bell, and may the markets be with you. See you in the next time. Take care.